Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Global equities are close to erasing their November losses as rising bets for Fed rate cuts revise markets. Hong Kong's worst residential fire in more than half a century kills at least 44 people and leaves hundreds missing. We are on the ground with the latest. And UK assets rally after the budget and a positive sign for Chancellor Rachel Reeves. That's after announcing tax hikes to pay for welfare. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. A reminder that it is Thanksgiving today in the U.S. So what we're going to see is lighter volumes than usual across the board, a shortened trading day in the U.S. and no cash trading for U.S. Treasuries. So bear that in mind as I walk you through the markets. But overall, what we are seeing is green on the screen, a better end for Wall Street yesterday, both the S&P and NASDAQ. The MSCI All-Country World Index climbed for a fifth straight session yesterday, cutting its November drop to just 0.5%. Remember, for the most part of November, we've been talking about the declines mostly in the tech space, but that is slowly being undone, and namely because investors are really beginning to lean in on the possibility of that Fed rate cut as soon as December. That's really turned things around. So today, S&P and NASDAQ leaning towards the green. The USD is slipping slightly down 0.1%. That would put it on track for another monthly decline, its third out of the last four. And then Bitcoin, take a look there at the recovery. We are seeing a bit of a recovery go through. We got to as low as I think about $80,000, now through 91,000, up about 1% today on trading. It's really been sort of a risk-on, risk-off barometer. And given the rebound in risk assets the last few days, you are seeing a rebound in Bitcoin as well. Let's flip over and talk about some of the price action in Asia. A lot going on in Chinese indices, but for the whole, we are seeing the MSCI Asia Pacific up 0.4%, a positive handover there. CSI, the Chinese Broad Tech Index, up 0.4%. Though keep an eye on a story that we're going to be covering later vis-a-vis the Pentagon memo suggesting that Alibaba, BYD, and others, although these Chinese tech companies have ties to the Chinese military. So we're seeing a bit of a reaction there. On the flip side, consumer tech stocks, consumer spending stocks are doing quite well in China today. The likes of PopMart jumping 8% on some new measures unveiled by the Chinese government. Hang Seng is up 0.3%, but of course keeping a close eye on the tragic events, the fires in those buildings. We'll be speaking to Min Lo, who's on the ground there later today. And then Kospi, just something to flag. The Bank of Korea kept rates on hold overnight, signaling that they are really focused on financial stability here and capping some of the losses on the Korean won. So we are seeing stabilization for the Kospi. Flipping over, I did mention that UK budget, big day yesterday. And what you did see was perhaps a sigh of relief for market participants, gilt stabilized, and you did see the pound recovering. So we have the pound up just a fraction this morning, about 0.5% firmer or so, and this is capping its 5 days of gains. The big question looking ahead is how more medium-term investors and also the public are going to be digesting this UK budget that was delivered by the Chancellor yesterday. A lot was at stake for her. We'll also be discussing that in the show. Now, let's switch back to the Federal Reserve because they have said that U.S. economic activity was little changed in recent weeks, though overall consumer spending declined further, except amongst higher-end shoppers. The Fed's Beige Book survey of regional business contacts showed that employment declined slightly and prices rose moderately. For more insight, joining us now is Mahjabeen Zaman, head of FX research at ANZ. Good to have you with us, Mahjabeen. Let me just start with what I was saying at the beginning, which is that markets seem to be cheering on the fact that the Fed are leaning, or at least the communication from the Fed recently seems like they're leaning towards that interest rate cut in December. Positive signal for risky assets.
Indeed, I think more rate cuts being priced in by the Fed really point to more positive outlook on risk asset side of things. And of course, we're heading into December where the center rally comes into play as well. And of course, all of this really does indicate that the dollar's rally for the last 2 months is coming to an end. And we continue to expect the dollar to now start to weaken from here. And, when you look deeper into the U.S. economic momentum, we do have lagging, data coming through slowly post the shutdown. But, as you mentioned, the Beige Book suggests that it's almost looking like a K-shaped recovery. It's the lower income households that are being impacted. Job side looking like less hiring, but less firing as well. More firing and less hiring. So things like that are playing through.
Yeah. And Mahjabeen, let me just ask you how you read the impact of all of this on the USD. In the past, I believe we've spoken about your bearish views on the dollar. How do you see things now, especially with some stabilization in risk sentiment with this risk-on mood in the environment right now?
I think FX markets are a little bit forward-looking. So in anticipation of those Fed cuts, we are seeing that rally come into play. But, I think the Fed cutting is only one piece of the overall dollar weakness equation. I think there's a lot more that's happening on the US front as well. Of course, we will be seeing shifts in the Fed, the FOMC board, with possibly a new member or a new chair announced soon. And, likely, again, the names that are coming through are likely more dovish in nature. So it could be that the board is tinging to a more dovish board. I think that will weigh on the dollar. And then at the same time, of course, when we look at the US economy as compared to the other economies around, we have Europe huge on the fiscal agenda. Yes, it will take time. You're not going to see results overnight, but we are quite optimistic, the euro. And for example, that's really been the anti-dollar proxy for most part this year.
I'll get there in a second. There's one thing that caught my attention from the Fed Beige Book yesterday. This line, every region saw price increases, with 10 of the 12 reporting moderate or modest inflation and 2 seeing strong input price growth. Do you think perhaps one of the underpriced risks for 2026 is sticky inflation and the resurgence of inflation?
I think so. I think that is one point to note. But I think, again, when we look at the Fed and their mandate, it's, again, trying to find balance between rising inflation or the unemployment rate, moving higher. And I think near term, it really does feel like the labor market is kind of front and center in terms of how the Fed is thinking. And, with the prices side of things, I think, different speakers have already come up to say that we have to wait to see, especially impact of tariffs feeding through, whether they'll be transitionary or permanent.
Yeah. Okay. Let's switch over to Europe. You said one of your strongest calls has been the euro. Where do you see things going from here? Because the ECB have essentially signaled that they're going to be standing pat on interest rates. Do you think the next driver is going to be the respective, stances, monetary policy stances of ECB standing hold and the Fed getting more active with their own rate cutting cycle to push euro higher?
100%. I think the rate differential is one thing. And of course, the big fiscal agenda, which was announced earlier this year, it's coming through. And I think it will take next 1 to 2 years to see that uplift. But, for Europe, they're starting off a very low base in terms of GDP improvement. And I think that will likely play in through the European currencies and will likely play out for the upside. At the same time, also, thinking about that central bank divergence, we are seeing, again, very aggressive easing price into next year. But when we look at the ECB and in fact, some other central banks as well, we're starting to see pockets of hikes being priced in at the end of 2026, early 2027. And, that's going to be better, again, be positive, the other currencies versus the US.
Yeah. Mahjabeen, I need to ask you about the pound and the price action we're seeing there. It's up a full point in the last 24 hours, up about 0.1% versus the USD. Do you think the Chancellor has done enough here to satisfy some of the concerns that at least financial market participants had about the budget?
You could argue that going into the budget, I think maybe too much negativity was priced in. And basically, the announcement now was kind of a 50-50, obviously, with the income tax increases only coming much later and, giving a little bit of a fiscal impulse into households in terms of the cost of living subsidies right away. And I think the overall, just looking at the price action, it really looks like it was kind of implemented to manage the bond market, at least stability. Of course, we have seen, 2022 was not too long ago where we saw the volatility in the gilts market. And I think in order to maintain that stability, this is how they decided to roll it out. But of course, how it plays out over the next few years, it's yet to see.
Do you think this budget is going to have any knock-on effects on the Bank of England's own decision-making in 2026?
100%. This budget is definitely a disinflationary budget, which makes it easier for the Bank of England now to go ahead. We have seen them sitting on the edge, especially in the past few meetings, with a mix of hawks and doves on the board. But I think with this budget coming through, they'll be a little bit more convinced to move the needle, especially because growth looks pretty soft in the UK.
Mahjabeen Zaman, thank you so much for coming on our show. Always a pleasure to chat to you, Head of FX Research at ANZ. European Central Bank Vice President Luis de Guindos says there isn't a big danger that inflation will fall short of the 2% target for a prolonged period. The Spanish official says the situation is progressing positively in the closely watched services sector and for wages.
I would say that the present level of interest rates is the correct one according to the evolution of inflation, our projections, and the transmission of monetary policies. And in that respect, I think that the risk of undershooting is limited in my view.
And coming up, we get an update on Hong Kong's worst residential fire in more than half a century. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Well, Hong Kong's worst residential fire in more than half a century has killed at least 44 people and left hundreds missing. Our China correspondent Min Min Lo is on the ground in Hong Kong. First of all, Min Min, you're standing very close to the site of the tragedy. Just talk us through whether rescue operations are still ongoing now and what the situation is like right now. Has the fire been contained?
Well, the firefighters are still trying to put out the fire. We actually keep observing new fires popping up at different apartment units. It shows you how challenging it is to put out the fire, because if it's not fully put out and something is still smoldering, it would pop up again and spread again. So it's still ongoing, the firefighting efforts. This morning we saw a change of shift, new firefighters coming in to take over some of the ones that were walking out looking utterly exhausted. And it's been over 20 hours now. This fire started yesterday afternoon at 3 p.m. and right now I can still smell the heavy smoke. It's stinging my eyes. And I mean, this morning we also saw a few people being wheeled out on stretchers. They seem to be conscious, but rescue efforts certainly still ongoing. There are still hundreds of people unaccounted for. The legislative councillors here are saying they're receiving so many messages from anxious residents trying to seek help to get in contact with their loved ones that they haven't been able to locate. So it's been a harrowing 20 over hours, and many of these residents, bear in mind, this is a government subsidized housing complex, so they're not wealthy people and they have to figure out now what to do next. Where are they going to stay, especially when they have lost everything? I mean, some of these apartment buildings look like they're just completely blackened, the shells of the buildings left. It's unlikely that they will be able to recover their belongings from the buildings after it's over.
The Hong Kong leader John Lee has just written a post on Facebook saying that Hong Kong will be inspecting all housing estates undergoing renovation. Do we understand what the catalyst was for this fire?
Yes, authorities still do not know what exactly is the source of the fire, but they know it started with the scaffolding. This is a housing estate that is over 40 years old. It was undergoing heavy renovation. So there were these bamboo scaffoldings, the green mesh surrounding the buildings, and authorities found substandard materials that were not compliant with Hong Kong regulations. They found flammable materials, including styrofoam boards sealing the windows, including tarpaulin sheets, plastic cloth, and they have launched a criminal investigation and arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence. And residents are demanding answers as to why this was allowed to happen. Where were the inspections, the enforcement? And of course, I think this is going to spark debate about whether or not these bamboo scaffolding should still be used in Hong Kong society today.
And you mentioned an investigation, actually a criminal investigation is taking place and looking into the causes of the fire, but also perhaps some bigger questions around the future use of that bamboo scaffolding. It's very specific to Hong Kong, but perhaps the feeling now is it's not the safest and not the most compliant with some of those regulations that are required to ensure safety in these buildings.
Indeed, there has been a lot of scrutiny over the bamboo scaffolding. It's a controversial issue because there are some Hong Kong residents that are very proud of this, dying or disappearing art of bamboo scaffolding. They are often preferred because they are cheap, they are easier to set up, they are lightweight, but at the same time there has been issues of people falling from height or the bamboo scaffolding collapsing and killing the people below, and of course combustible issues of fire. And so starting from March of this year, the Hong Kong government had already started to phase out bamboo scaffolding, requiring at least 50% of public works to replace the bamboo scaffoldings with non-combustible steel frames. And I think the bigger question now is also what happens to the nearly 2,000 units in this housing estate behind me, housing about 4,000 residents or so. Where are they going to stay next? So authorities have now identified some schools as temporary shelters, some community centers as well. They have identified about 1,400 empty apartment units across Hong Kong that could potentially be a place to house those residents temporarily, but a lot of questions for the longer term as well.
Min, thank you so much for the reporting. Min Lo in Hong Kong. Now for a look at some of the other stories we're following. 2 U.S. National Guard troops have been critically wounded in a shooting just blocks from the White House. Officials say a gunman was taken into custody after another guardsman returned fire and moved in to stop him. President Trump was in Florida at the time, but has ordered an additional 500 troops deployed to the nation's capital.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
The IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the war-torn nation's international allies. The two sides have agreed to a new 48-month arrangement under the Extended Fund Facility with potential access to around $8 billion. And coming up, Barrick moves to end a major standoff in Mali. We'll have the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, Bloomberg has learned that Barrick Mining has agreed to pay Mali more than $400 million to settle a 2-year dispute that shut down one of its most important gold operations. For more, Bloomberg's Indira Ganga joins us now from Kigali, Rwanda. Indira, is this finally the end of this 2-year row between Mali and Barrick?
Good morning, Jumana. So it seems, because for the first time we're seeing both parties reach an agreement they might not necessarily be pleased with, but at least they're comfortable with it. And in this agreement, Barrick is going to pay the government of Mali 144 million CFA within the first 6 days of signing this agreement, and then another $50 million CFA is going to come in terms of VAT credit offsets. And this is really monumental because this is a company that had taken the country of Mali to an international court to begin their arbitration process, and because of this agreement they're going to pull that back. In exchange, the government of Mali also has to give something. They're going to give back the running of the mining complex back to Barrick. They're also going to release some of the staff and employees of Barrick that they had actually detained. And the genesis of all this is the government of Mali 2 years ago was demanding more royalties and a higher stake, and these mining companies, including Barrick Gold, Resolute Mining and B2 Gold, were a little bit hesitant, and instead of having conversations, the government just dialed up the heat. And what we saw was they demanded backdated taxes, and they also issued arrest warrants on some of these employees. And earlier on we saw B2 Gold and Resolute Mining paying through their teeth to get out of this. 2 years later, we're seeing a resolution come to play with Barrick Mining. And what is happening now is that if they resume operations immediately, we are likely to see 670,000 ounces mined, $1.5 billion in cash flow. And the market has received this news really well, with shares jumping 8.5%.
Yeah, makes sense. Does this set a new precedent in the region where mining conflicts are growing, this type of settlement?
Jumana, it depends on how you look at it and the region that we're looking at. If we look at the Western Sahel, there have been a lot of military coups. So these mining companies are dealing with military junta, and they are not necessarily one to play by the book. And the classic case is Burkina Faso. In also Niger, we saw a big conflict between Orano and the government of Niger over uranium. And the government went ahead and seized over $200 million worth of stockpile. Orano has gone to the international arbitration, and we're waiting to see how that plays out. But there have also been other jurisdictions where the democratically elected governments, and we're seeing structured arbitration. We saw that in Tanzania versus Montero. We saw that Quantum versus DRC. And because of this, production was able to resume. They maintained their revenue and also secured investor confidence. So in the case of Mali, yes, there was an arrest warrant on the head of these executives. And when that happens, logic, commerce, and markets go out of the window, and you have to sort of eat the humble pie and negotiate with them on their terms. Yes, the new mining code has come into effect, but the effectiveness of the whole scorched earth policy is still very questionable.
Andiro, thank you so much. Bloomberg's Andiro Ganga in Kigali, Rwanda. Now, for a look at some of the other stories we're following today, Ghana's central bank delivered a jumbo rate cut as inflation continues to cool. The central bank lowered its key rate by 350 basis points to 18% to support economic growth as it projects consumer prices will continue to slow. The bank now expects inflation to settle between 4 and 6% by year end, raising hopes for a stronger recovery. And soldiers in Guinea-Bissau have seized control of the nation, accusing drug traffickers of plotting to rig last weekend's elections. A group calling itself the High Military Command claims it has suspended state institutions and deposed the president. The president and his challenger had declared victory before troops moved in. Nigeria has declared a national security emergency after a wave of mass abductions forced several schools to shut down. President Bola Tinubu authorized security agencies to recruit more personnel and ordered nomadic herders to surrender illegal weapons. Nearly 400 people, including primary and secondary school students, have been abducted in the last 2 weeks, with many still in captivity. And high coffee prices are here to stay for longer, according to Italian roaster Il Caffè. The company, known for the high-end espresso sold in silver and red cans, plans to raise prices again in January after 2 increases already this year. Lackluster harvests and U.S. tariffs have driven the cost of coffee beans to record highs, although prices have eased slightly since U.S. President Donald Trump expanded tariff breaks for Brazilian coffee. And coming up, UK Chancellor Rachel Reeves refuses to rule out further tax hikes after increases in her latest budget. She spoke exclusively to Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Global equities are close to erasing their November losses as rising bets for Fed rate cuts revives markets. Hong Kong's worst residential fire in more than half a century kills at least 44 people and leaves hundreds missing on the ground. And UK assets rally after the UK budget, and a positive sign for Chancellor Rachel Reeves. That's after announcing tax hikes to pay for welfare. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, getting you up to speed on these markets. A better day once again for Wall Street. And one of the big themes, the narratives that has emerged this week is the Fed pivot and the language, the communication that's come through from various policymakers, from the likes of Williams and then Waller, suggesting that that rate cut in December is actually on the table. So that spurred risk on this week, and not just for U.S. equities, but pretty much globally as well. Earlier on, I was saying the MSCI All Country World Index claimed for a 5th straight session, cutting its November drop to just 0.5%. So we're very close to erasing the losses that we saw at the beginning of the month. Today, S&P futures leaning sideways, NASDAQ up 0.1%. Remember, it is Thanksgiving today, so cash markets are closed for both equities and bonds. We're keeping a close eye on futures. They close early, and then we're going to have a shortened trading day tomorrow as well. So volumes might be thinner than usual. Just pay attention to that. USD slipping a little bit, down 14 basis points today. And then Bitcoin, we have seen a recovery, regaining some grounds in since we got to the lows of about $80,000. It tends to be quite volatile, but I will say it has actually been a good barometer for risk appetite. So given the recovery that we've seen in risk assets the last few days, not surprising, we've seen a recovery in Bitcoin too. And switching over, I do want to mention the pound, because we're going to do a segment now about the UK budget. That was a really big day for the UK yesterday. And initially what we did see was a pop in the pound. It's actually been 5 days of gains for sterling. In the past 24 hours, we're up about 0.7%, a full point. And the big question from here is, can these gains continue? Has the Chancellor done enough to satisfy financial market participants, both in terms of gilts and, of course, in terms of the outlook for the UK economy? We're going to discuss more of that in just a moment. So the UK Chancellor Rachel Reeves did enough in her budget to help her and Prime Minister Keir Starmer survive, building back a fiscal buffer and expanding welfare. Now, speaking with Bloomberg, Reeves defended her plan, which included £26 billion of tax rises.
Last year, I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government. But that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Well, for more, I'm joined by Bloomberg's cross-asset strategist, Ven Ram. Ven, there was so much drama going into this budget, lots of U-turns, and market participants didn't really know what to make of it. I will say that, look, judging by the price action in the last 24 hours, the reaction has been pretty undramatic.
Pretty undramatic, but one of relief as well. And I think that it's an outcome Chancellor Rachel Reeves will take, heading into the chaotic two-week event. Heading into the event 2 weeks before time, I think there were plenty of leaks and it was a chaotic setup. So she will take that. Now, primarily what she's done is she's loosened the purse strings, fiscal purse strings in the short term, but found a way to backload the fiscal consolidation. She's increased the buffer, the financial moat for the government, the fiscal buffer, to 22 billion, which is way above expectations. And that is the primary reason why the risk premium that was embedded in the markets is going to come off. But there is the concern about inflation. The OBR has raised the inflation forecast, so that's going to be an issue going forward.
Yeah, well, people are calling it the spend now, tax later budget, which is, I guess, something to think about in coming years as we get closer also to the next election, too, which was surprising, I think, as well. There's a big question mark as to whether she'll follow through. I do want to ask you about the OBR. Also, irrespective of the fact that there was a fat finger and they released their assessment of the budget early, which, caught a lot of attention in the UK, their inflation forecasts are pretty interesting because they've actually revised upwards, as you mentioned, the inflation, where they see inflation averaging next year to 2.5%. People thought this was going to be a budget that would bring down inflation.
Exactly, because, she has cut the energy bill dramatically, which is disinflationary. But on the other hand, the national minimum wage has gone up by 4.1%, which is inconsistent with the BOE's 2% inflation target. So which is why I think that the OBR has put up the inflation forecast to 2.5% from 2.1% in March. So I think that, it is now up to the BOE to see how it passes the reaction function. So we're going to hear from Megan Green this evening. Let's see what she's got to say. She's one of the hawkish rate setters.
So not necessarily the dovish gift that people were hoping for the Bank of England then.
Definitely not, because if you look at inflation swaps, front-end inflation swaps, they've actually risen. They actually rose yesterday, and which is why I'm kind of less bullish on the pound, because the risk premium that was embedded in the pound, which was about 2.6% heading into the event, is not going to come off fully. So I think that the pound is going to be buoyant, but it's not going to revisit those peaks that we saw early in the year.
Yeah, great stuff. Ven, thank you so much for the analysis as ever. That was Venram, our cross-asset strategist. Well, for more on the budget, we're joined by Clementine Munro, private office advisor at Allsopp Allsopp. Really good to have you with us. And for those unfamiliar, obviously you advise on real estate over here in Dubai. So I'm sure keeping a close eye on some of the announcements from the UK budget yesterday. I called it a spend now, tax later budget, but also it was a budget that seemed to be very heavy on wealth and property taxes as well. What's your assessment on what this might mean for potential new clients to the UAE?
I think the so-called mansion tax actually ended up being quite benign. So I'm sure there was a collective sigh of relief at the amounts that were released by Ms Reeves, just £2,000 on homes over 2 million and topping out at £7,500 on homes over 5 million. So that's relatively palatable. But I think there is a real sense of fatigue amongst the wealthy in the UK. They're used to tax planning, they're used to planning for their futures, and this constant environment that we've had of uncertainty is certainly having a knock-on effect as people start to look to de-sterling their portfolios and move some of that wealth into landscapes like Dubai, where it's much easier to forecast for the future and the tax landscape is so clear.
Do you anticipate further movement from UK, wealthy UK individuals to this part of the world then on the back of this budget or in subsequent months?
We do, and I think it's less to do with the actual tax announcements, but more that real sense of fatigue and the leaks and that run-up, and what a murky landscape that makes for people when it comes to looking for decisions.
Yeah. How has the influx of Brits to the UAE looked like the last couple of years? Are you seeing a pickup in momentum?
So there were 16,500 millionaires who left the UK, and our data shows that 9,500 of them left on UAE shores, and we're seeing that. So it's unusual where you have both the prime and the mid segments continuing to perform, but that is what we're seeing in Dubai.
And what are the types of property needs that they're looking for? Are these Brits coming with the purpose of buying property here, or is it mainly in the rental space that they're looking at?
I would say, to be honest, it's purchasing.
Okay.
It's as you know, the rental landscape here can be a little bit frustrating, and I think what we're seeing is people put down roots. The schooling growth that we've seen here has supported that, and then even buying your primary residence and then diversifying into investments. And again, there'll be a knock-on effect as margins are tightened in the UK by that 2% increase that Rachel announced as well.
Do you see this predominantly occurring in upper income, the wealthier segments of society, or are you also seeing some working class Brits make the move as well?
Well, I think what's interesting about the budget announcement yesterday is where they're doing this freeze on income tax bans. I think we will see those high earners, not necessarily that ultra high net worth community, but that community who are still earning, now being taxed further, being dragged into this bracket that's going to give them less income to do as they wish with.
Yeah. What do you think the biggest risk is? I mean, not necessarily UK related, but we spend so much time here talking about the positive outlook for Dubai real estate and the fact that so many people are moving here from all parts of the world. What do you think the biggest risk is to that momentum?
I think the risk is going to be the oversupply that could come from the 1 and 2 bedroom studio apartment market. So if you look at 130,000 units handing over in that space compared to only 15,000 villas or townhouses handing over in that same time period, I think supply could become a bit of an issue.
So what about the luxury premium part of the market?
I think that's still relatively buoyant. There isn't still a lot of supply there. And if you look at this millionaire migration and saying 9,800 of them arriving in Dubai, there aren't necessarily 9,800 luxury homes in surplus. So I still think we have supply and demand on our side there.
Yeah, and just, UAE relative to the rest of the region, do you think that other parts of the region are going to catch up as well? Saudi obviously making a big push as well, easing some of their foreign ownership laws. How do you see the migration occurring vis-a-vis other cities?
I think we're seeing a move already into Abu Dhabi, which is really exciting, and beautiful product being offered in Abu Dhabi. And not only that, but relatively more affordable to Dubai. And then if you look at the infrastructure frameworks that they're putting in with the airport located closer, the metro line as well, I think it's a good news story for all of the Emirates.
Yeah. Okay. Thank you so much. That was Clementine Munro, Private Office Advisor at Allsopp Allsopp. Thanks for joining us today. Well, coming up, the Pentagon names several Chinese tech firms that it alleges are connected with the nation's military. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Pentagon is accusing major Chinese tech companies of aiding the country's military. The U.S. Department is recommending that Alibaba, Baidu, BYD, and others should be added to an official list. For more, we're joined by Bloomberg's Jill Deesis in Hong Kong. Jill, what would it mean for those companies to be included on the Pentagon's list?
Hi, Jumana. So really, I think, first of all, there's not really a ton of immediate legal repercussions of being included on a list like this. But I do think there are several considerations that you would have to have. Were these companies to be included on this list, that could be anything from sort of, the reputational damage being something that dissuades U.S. investors in particular from investing in them, could, prohibit them from obtaining things like U.S. government contracts and such. Some other factors there as well. When we saw other Chinese companies included on a version of this list back in January, we did some sort of associated stock prices fall because of that. Again, because of some of those threats to that reputational damage that it means to be included on a list that essentially implies that you're linked to the Chinese military. All of that being said, I do think there's a couple of really important caveats with this story. First of all, this recommendation did come a few weeks before that Trump-Xi meeting happened in South Korea, so unclear, whether or not there's any sort of further considerations that just kind of go off of, some of those improvements that we've seen in U.S.-China bilateral relations since then. The other piece of it, too, is that, again, the last time we really saw this list updated was in January. So I'm not sure, this could be something that ultimately amounts to something that's sort of considered on a yearly basis. Not any indication at this point that they've been included, but, obviously we're talking about some pretty serious allegations here.
And Jill, how have these companies actually responded to these allegations?
So far, Jumana, Alibaba is the only company, from this particular COP that we've actually heard back from them saying that there's really no basis for their inclusion on a list that links them to the Chinese military. We've also seen a response from the Chinese government itself, which sort of tracks with some similar language that we've heard China respond on, when these types of accusations sort of crop up in the past, which is essentially them saying that the U.S. government has an overly broad definition of national security. You're seeing that Chinese rebuke on your screen right now talking about, that idea of over broadly defining those sectors. So I think, that's one thing that is, really important to keep in mind here is that you have a pretty forceful denial, not just from Beijing, but also from Alibaba. So, again, that kind of factors in here. If anything, though, Jumana, this really does show that despite some recent improvements in relations between the U.S. and China, obviously some of these tensions still remain, particularly when it comes to anything that's really connected to advanced technologies and national security.
Jill, thank you so much. Jill Deesis in Hong Kong. Well, U.S. travelers face some early disruptions to their Thanksgiving plans after air traffic at some of the country's busiest airports was halted. The Federal Aviation Administration issued brief ground stops at LaGuardia and Newark airports, two of America's busiest by passenger traffic. The disruption was caused partly due to weather and ongoing staffing issues. And coming up, UAE is betting big on Africa for growth and food security. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The UAE is accelerating its push into sub-Saharan Africa, aiming to boost food security and tap into some of the world's fastest growing economies. Joining me now is Bloomberg's Anthony Esquazan. Anthony, so what is driving the UAE's renewed push into Africa?
Well, Joanna, I think that I spoke to Minister Al-Hajeri, and they really want to take advantage of the fact that the continent has many very fast-growing economies. In addition to that, the UAE has to import most of its food. Africa is not very far away. It's got plenty of land, and it's something they can take advantage of by forming alliances, buying land, and getting people to grow food under contract for them. So there are a lot of sectors, and we also saw them announce a large $1 billion artificial intelligence investment in Africa over the G20. So I think they are looking at a multi-sectoral approach.
Well, what would you say are the markets that the UAE is most interested in? You mentioned the importance of food. Beyond food, where would you say are the sectors that they're placed most of their interest?
Well, they have some renewable energy companies. Africa is undergoing a bit of a renewable energy boom. So we've seen those companies being very active. There's a company called Masdar, which has pledged to spend $10 billion in Africa over a certain period of time. In addition to that, we've seen data center investments, I believe, in Kenya. And the minister said that they would plan to roll those sorts of investments out further afield in other countries as well as in Africa. And then, of course, we've got Dubai World already involved very heavily in African ports and looking for further opportunities.
Are there any bottlenecks or challenges that these companies have had to surmount in order to get exposure to the continent?
Well, I think they face the same bottlenecks and challenges that all investors do. Africa is has a lot of relatively underdeveloped economies, not very good regulations put in place, and lots of skill shortages. So getting things done can take a lot of time. There's a lot of bureaucracy, and working out how to do things and deal with local business practices has been quite difficult. But I don't think the UAE is alone there. I think European, American, Chinese investors face exactly the same problems. But the impression I got when I spoke to the minister is that the UAE is pretty determined and quite optimistic that it can ramp up its investments pretty rapidly and increase trade substantially.
Bloomberg's Anthony Esquazan, thank you so much for bringing us that reporting. Now, for a look at some of the other stories we're following today. The UAE's biggest weapons maker, Edge Group, says its top priority now is building a homegrown air defense system to counter rising drone threats. The project, dubbed Skynight, will be Edge Group's flagship product, which is designed to shoot down swarms of small drones and could be operational as soon as next year. The defense company has been rapidly expanding its footprint and aims to expand exports further, having already exported armored vehicles to Saudi Arabia, Indonesia, Algeria, and Sudan. Bloomberg News has learned Saudi Aramco has chosen Citigroup to help arrange a potential multi-billion-dollar stake sale in its oil export and storage terminals business. The Saudi oil giant is expected to kick off a formal sale process as early as next year and is likely to see interest from large infrastructure funds. Aramco aims to raise billions of dollars from the sale as part of a broader attempt to free up cash for investments. Turkey's central bank governor, Fatih Karahan, says market expectations for inflation will be crucial in the coming period. In a televised interview, he noted that household expectations have moved further away from realized data, while lira's recent gains have not helped curb prices as much as expected. Karahan said monetary transmission mechanism is working well, and changes to inflation forecasts were due to global developments. And Pope Leo is heading to Turkey today on his first trip abroad as pontiff. His trip includes a meeting with President Erdogan, which comes amid acute tensions in the region. The Pope will deliver speeches focused on strengthening dialogue. After Turkey, the Pope will travel on to Lebanon as conflicts across the Middle East continue to intensify. Chinese ride-hailing giant Didi has reported a 67% rise in quarterly profits, a positive sign ahead of a potential listing in Hong Kong. Net income totaled $212 million, driven by solid momentum in China that offset losses in international markets. Didi, often described as China's answer to Uber, was forced to delist from the New York Stock Exchange after Beijing cracked down on data sharing practices across the internet industry. Automakers Stellantis and China's CATL have broken ground on a $4.7 billion battery plant in northern Spain. The project underscores Europe's growing reliance on Chinese technology. The factory is expected to operate at 30% of its planned capacity by 2028 and employ nearly 4,000 people. It will produce about 50 gigawatt hours of batteries annually by 2030. And a look at markets. It is Thanksgiving today, so lighter volumes than usual, but what we are seeing is green on the screen for the futures that are trading. S&P up marginal, up 4 basis points. The Nasdaq up about 9 basis points as well. Some of those concerns around AI that were really the forefront of discussions a week ago have sort of subsided now. We saw a strong close yesterday for both the S&P and the Nasdaq, respectively, up 0.7% and 0.8%. European markets not doing a whole lot, but keeping a close eye as well on how the UK market opens up today. It's not shown here, but from what I'm seeing on the screens, it's basically looking up to open flat after a better session yesterday. This after that monumental UK budget, not delivering a lot of surprises, but perhaps enough for market participants at this point. And switching over, let's just take a look at oil as well, the Brent complex, because what we have seen is steady declines, and that's continuing. Brent sitting shy of $63 here, 62.80 is where we're at, down 0.5% today. Yesterday, we were speaking to the global head of commodities at Goldman Sachs, and he was saying that they see an oversupply of up to 2 million barrels per day, and that continues to put downward pressure on the energy complex, in addition to that potential breakthrough between Russia and Ukraine that we're watching out for as well, that could bring extra barrels to the market from Russia. But that was it for our show, Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.